Here we go. Stocks by the numbers. Welcome back. Wanted to come back to you guys with just a quick long form video. I know a lot of people were missing it. You're not able to make the streams. I do still say, though, the streams have been more positive than negative. We've been making some good short-term calls, and of course, if people ask about something like an SMCI or an MBOT, I pull it up in the stream, go over it. So again, I understand there may not be a video waiting for you every day now like there used to be, but in my opinion, I think it would be a good idea to at least go back and skim through the streams throughout the days, throughout the weeks, if you happen to miss it. But anyway, we're looking at, again, my Trump video put out roughly 12 months ago. It was about the third week of January. Everything sold off, March, April. Of course, you could see the big drops in a lot of these names we're about to look at. But I just wanted to recap everything that I spoke about, and we can see if I actually know what I'm talking about and see how these stocks actually performed. So we spoke about defense. We knew Trump was big on defense, America first, make America great again. The overall sector did decent. I personally spoke about General Dynamics, symbol GD. The video was here on January 21st, and you can see everything kind of dropped down afterwards. January 21st stock was about $270 a share, we'll call it. Stock right now, $356 a share, hit 360. So, we're talking roughly, what's that, about 30%? Up roughly 30%, 35% we'll call it, with dividends and whatnot, over roughly the last 12 months. Still staying up, still having highs. Of course, we just got the news of Venezuela, so you have a pop today, 3.5%, but GD was one that I mentioned specifically, which seems to be doing very well. And even if we compare it again to something like a Lockheed Martin, you could see, it was right before this drop. Lockheed Martin on that day was about 500 a share, we'll call it. And you can see we had drops, we rebounded back to where we were, but we're essentially flat for the most part. RTX, you can see on the up and up. This was the big winner, but again, I know I specifically mentioned GD and didn't speak about this specifically in the video, but RTX was one that I spoke about right here when they were chunking it down from the 90s into the 80s and the 70s. Here, I remember in the summer of 23, that's when I drew out the downward channel, and I was saying in Discord, in my opinion, I would consider taking a position, building a position here in RTX. I think it's tremendously undervalued. I think it comes back strong, and you can see it came right back to around that $90, $100 level, and of course, the longer you held it, the more you're up. But from these bottoms, again, even if you started buying here when I first mentioned it, it's roughly 133% move from those low levels. So that's why I say, in my opinion, fundamentals ring true, especially if you're able to buy long-term options or accumulate shares. Then in my opinion, I actually think it just makes it easier. But RTX had a pretty good 12 months as well. Moving through the video, we're moving. I mentioned PDS. I thought there was going to be much more drilling. I thought this company was going to benefit much more than it did. Of course, the problem with something like this, again, is the fact that right after we looked at it, we had a little bit of a rally in all of these names, and then again, we had the drop-off a couple of months afterwards. So unfortunately, the timing was not perfect. But as we always say, if we like a stock up here, we should love it down here. So if you did take any of these positions, hopefully you added to them. But again, overall, most of them are up, even if it's a little bit. But January 21st right here, you can see stock was like 65, 66. I mean, dropped all the way down into the high 30s. And then, of course, recently has rebounded and climbed up to about 75. So made a good comeback, of course, if you were able to add to it. But again, it was just bad timing. We had the sell-off. But PDS, in my opinion, I still like it personally. You can see it looks like it's on its way back up to the top of the channel here of 85. And again, in the numbers could be a good one, if you want to wait till you're in the green and then you want to get out, kind of understandable. I do still like it in the long term personally. But again, now with this Venezuela news, apparently we have all this oil now on our hands. So I'm not exactly sure how much urgency we're going to be putting behind drilling, right? But again, PDS, that was an idea with the increased drilling that never really came to fruition. But yeah, in the video, I mean, it's showing it was about 65 and a third when I recorded the video. So I mean, technically you're up 10%, but you know, that's we want more than that. Okay, next one we looked at was UEC. We were talking about uranium and how Trump and Vance both are big on uranium, nuclear. This was January 21st. You can see right here, 7 and change. At the time of the video, it was after the close, it was 742. And you can see, of course, everything sold off afterwards, but the stock ended up climbing to almost $18 a share, currently back above support trend line as predicted. I said that would most likely happen, if I recall correctly. But you can see the stock right now sitting at $14, so you're still up roughly 100% over about the last 12 months. And, of course, the valuation may be a little out of whack here. We're sitting at a $7 billion market cap. But I still say, in my opinion, the money is going to continue to flow into that sector. UUU at 5.5. Again, basically said the same thing. Yeah, you can see this one went on an absolute rip. Yeah, you can see January 21st right here. 5 and change. Dipped down to about 3, we'll call it. And then absolutely exploded. Ran up to 27 and a third. Stock still sitting here at 18 and a half. Meaning, again, if you bought on that day and held, you are up over 200% on something like UUU. We saw them trending. We saw the hype and the money flow coming into the entire sector, right? So we saw the way all of these stocks basically broke up and out. I did mention that I thought more was going to come out in regards to the pharmaceutical and drug industry, and I think I just may have been early, right? Because we've kind of been hearing more of that news lately. But unfortunately, I got one very wrong. I did say, again, I'm now 0 for 2 on Eli Lilly. Because in the past, I said I thought it was overvalued as well, but it continued to run up to the 700s. And you can see right here, January 21st. Stock is down there. I did the video at $742. I said, in my opinion, like I wouldn't personally feel too comfortable jumping into this one. And you can see right after I did the video, it ran up into the 900s. Of course, took a big hit with the rest of the market and then ran up to over 1,100 and is still sitting here at over $1,000. So that is one that apparently I was wrong bigly on that one, and it climbed roughly 50% over the last 12 months since I did the video. I do still stand by my analysis, though, even though that was a dead wrong call. I do still personally not feel too comfortable investing into these pharmaceutical companies. I also mentioned Merck again as a comparison to something like Eli Lilly, and I said, in my opinion, like, I don't know if I feel too comfortable. On that day, it was 96 and a quarter, so you can see it's up about, 10-12% since then. Had the dip, came back up just like Eli Lilly did, but Lilly, of course, showing you a bigger return. Again, if anyone, disagreed and you jumped into these companies, obviously good for you, you're up. But this was just how I was personally feeling. I spoke about Schlumberger, and again, unfortunately, Schlumberger, right after I spoke about it, yeah, you can see January 21st right here at about $44 where it is now. And you can see we channeled and then we began to drop with the rest of the market. And then, of course, we had some light numbers here on the EPS and the revenue in that April earnings. And we've kind of kept it in this sideways channel. I was looking for a drop back to about 30 and a half. And you can see, I think it came down to about 31 here. Kind of hung out, tried to test and hit that mark. But then recently, we started climbing on the up and up, and then of course with this news, with this Venezuelan news, now we have something like Schlumberger popping roughly 9%, and now we're back up to 44. So if you did happen to jump in at that price now, no harm, no foul, and you're probably technically up if you drip these dividends. Again, DRIP stands for Dividend Reinvestment Program. But I personally still like Schlumberger. I do think it's still in play, but I was very early, and now we're getting some news and some catalyst to put it back in play, right? So I do think it runs actually back up into the 50s and even potentially that 60 range. But again, the company, the stock may work out well, but I do still say that, in my opinion, oil prices should drop. So I'm not entirely sold on that. We could come back to it, but usually they say, right, the initial reaction, your initial analysis is usually the correct one. So I'll stand by that analysis. And again, you can see technically from January 21st when I made the video, I was completely wrong on this situation until today. So everything happens for a reason, right? I don't know if I could jump ship on something like Schlumberger right now, so I have to stand by my analysis. Next stock was LAC that I mentioned. Of course, LAC had a very nice year. And we can see back here, January 21st, this is why I was saying domestic minerals, metals, materials, they've all done very, very well this year. And LAC on this date video, it was $3.20 a share. And again, we dropped into the low twos, went sideways. A lot of people got impatient. And then, boom, we found out, of course, the big news, Trump stepping in, taking the stake, right? We got that news, of course, with Intel. That's coming up soon. But you can see LAC runs up to roughly 10.5, falls back to about half that, having a nice day today after the Venezuela news, 9.25% on the pop. In my opinion, I do still stand by my analysis and believe that LAC will turn into a very nice long-term grower. But technically, the stock is up, still 66%, roughly 2/3 from when I made the video. But of course, we had the pop back up to 10, essentially where it started when it split from the Argentinian segment, right? So that was very, very good news, I know, for a lot of shareholders who jumped in at, 6, 5, 4, and they were watching this for a while. Boom, we got the news, and we saw the value come back up to 10. So that may have calmed a lot of people down. I mentioned the Alaskan pipeline. I also mentioned the Hilcorp Energy corporate bonds in passing, yielding anywhere from like 6.25% to about 8 3/8%. Again, income from those bonds, corporate bonds taxed at the OI level, the ordinary income, your federal income tax bracket level. I spoke again about the prison stocks. The problem is, I do still stand by that analysis. We know that something like CXW has been holding up and coming back very well the last couple of weeks. But unfortunately, we spoke about them again right before the markets pulled back. So even if we pull up something like Geo Group, yeah, you can see right there, January 21st, I mean, literally at the peak of the sector was when I made my video, right? So overall, I still stand by the analysis. However, on paper, the position is down big. When looking at both of the companies at the time, I said I like both Geo and CXW. In my opinion, I do prefer CXW, even though Geo should be all right. But again, technically, our timing was off. The markets began to sell off. And you can see something like Geo down, about 50%, got completely decimated. But switching to something like CXW, we can see technically held up much, much better, right? CXW was about 23.5, high 23s, and of course had the same rocky road and big drop, and recently started to climb back again. This was my predicted path drawn out like here, and you can see we came right down to the level, and we're bouncing back as I expected, ready to pop back up to 20 plus, and hopefully retest the top of the channel and have the breakout, which, in my opinion, was supposed to happen back here. But Hopefully it happens soon, over the next month or two, potentially waiting for these earnings here, roughly second week of February, but we really should be on the up and up in my opinion. This one's undervalued, but CXW holding up a little better from the exact day of my video. But overall, again, the gist, the broad stroke of the analysis, I think, is still in play again. I may have just been early, but technically, we have been receiving very good updates about Law and Order, and, of course, some pretty good updates coming from CXW specifically, bringing, what they say, like a couple of more facilities back online. So, I still like CXW. I then spoke about Byrna. Byrna went on quite a wild ride here. January 21st, stock was 30 a share, and you can see it continued to go up about 10% to about 34 and change. Had the big drop with the markets, immediately rebounded right back up to 34. It's been bouncing around. Actually looks like we're potentially wedging here since last earnings. And you can see right there, we came down, rejected below the moving average, came down back into the channel, and technically closed right at that trend line. So it might not be the biggest move, but maybe something like burn puts could potentially work out in the short term if we see a rejection coming back down here into the 16s. But then as we hit 16, 15, in my opinion, I would start piling in. And I would wait for the technical breakout of the wedge and the rise going into the earnings coming out roughly first week of February. So that is a play that is 1 and 2 plays that could potentially have potential, and potentially be in play over the next 3 to 4 weeks. Something like burn, but technically it is down, was holding up well, but burn, the numbers, again, let's see. All right, this quarter came out very slight miss on revenue. Then we beat 28.5. And then very slight miss on revenue, but they're maintaining themselves. I know last time we looked, the Amazon sales and stuff were very strong. And I know they mentioned they were starting to set up a few like brick and mortar locations. I'm assuming so you can like come in and test the equipment before you make the purchase. And again, some people just seeing this online, they might not feel too comfortable, right? But if you can actually go to a location, you can speak with like, one of these experts who knows the equipment, test it out, get a little tutorial or something, then you'd feel probably a lot more comfortable making that purchase, right? So I do still feel that Burn is a decent company. And again, market cap here now at this level, 400 million. Of course, we could crunch the numbers. You could make the argument overvalued, undervalued, but in my opinion, I still like it. I do still like it. And again, we have some technicals lining up, so keep that in mind. What was the next one? Moving, spoke about Burn, spoke about LEU. Again, Centrus Energy, another energy company, low enriched uranium, LEU, technically did phenomenally well. Overall, again, we spoke about it in the triangle. Right here at about $39.40 a share. We had the breakout immediately up to 100. We came down here January 21st, right here. I did the video. The stock had a 13.7% day when I did the video. It was up 10 points. It was at 88.5. Right there. And I said, we still like it. We still like it. You had the run up to about 120, the pullback to about 50, and then the stock absolutely explodes, begins to catch everyone's attention. We're beating earnings handsomely, 20, 30, 50 million, and of course they just missed earnings last quarter on the revenue, but we were on the up and up, and the stock, as you see, runs up to $464 a share. So even from 88 at the time of the video, you can tell that was a very big winner. Stock still sitting here at $300 a share. Market cap now $5.5 billion, 41 PE. So of course it could start cooling off, but LEU, huge winner for us on the channel, from 40 to 80, 90, 100, and then of course up to 300, 400. Had a handful of people in the Discord very excited about that one, very happy about that one. I mentioned something like Rolls-Royce I still believe in, said I would still be a buyer, confident that they would still be receiving orders. Everything would be fine. Right here, January 21st, 25, stock 731 that day on the close. And you can see, not only did it continue to do absolutely phenomenal, but even today as we speak, new highs on Rolls-Royce, 1692. So you are up over about 150% from this point. If you did take a position in Rolls-Royce, and of course reinstated their dividends. Sometimes you're just too damn good, what could I say? Rolls-Royce, though, again, huge winner, brought to you on this channel originally by me at $1.20 a share. I spoke about Verizon, said I liked it as a brand name, you know, kind of dividend payer in the space. That was right here. Yeah, about $39 a share, and you can see that one actually held up much, much better immediately than the rest of them. Stock runs up to 47 1/3, flattens out, maintains about the low 40s, and then, of course, recently had the drop, and is still sitting here at about 40 1/4. So, Verizon went on a wild ride, but technically, I mean, it did work out immediately, but even over the last 12 months, holding its own, you're getting your dividend, still should be alright. Still should be alright, in my opinion. We're moving. Again, I mentioned something like LPX in passing just because I was speaking about domestic minerals, right? Supplies, everything else. And again, unfortunately, the markets ended up dropping off and shit in the bed right after we made the video. So, first video was what, like 55 a share or something. So stock ran up here, as you see, up to like 120. We did our video here at about 117. And then we completely fell off a cliff. But as we were down here, anytime we were near this level, and again, someone like Deli Bob, shout out, who is in the Discord, he saw the alerts and asked about LPX as we started to pull back. We spoke about this key support level, and you can see that we had very nice bounces off of this level, and we had calls in play here in this upward channel. As we started to break again, I was basically saying I'd wait for the pullback here, and they broke it, of course, because we planned God laughs, but you can see we came down to about the level of 79, and then we chunked right back up to it, and surged back above it, and climbed up to almost 90 here with the retest. So, in my opinion, I actually still think it's in play again. At roughly 50, I said in my opinion, $150 stock. It runs up to 120, now has the pullback here, it's sitting in the low 80s. I still personally like it. I still think the whole situation is undervalued, and again, I remind you that just a few weeks after I did the initial LPX video, talking about something that not many people even know about, a sector that not many people pay attention to, we got news that Warren Buffett took a position in LPX. Great minds think alike. Again, we share the same birthday, myself and Warren Buffett. I then mentioned US Steel at 36.5, which of course was a phenomenal winner and is no longer listed. Financial Genius, US Steel. Again, initially brought to you on the channel, I believe, at like $19.70 a share. Ended up getting a buyout bid at 55. Talking about US Steel. I then speak about SCCO, which of course is still doing phenomenally well. So here we go, January 21st, SCCO. Yeah, it was 98 on the close on that day. I said, in my opinion, again, metals, materials, right? That's why I was talking about US Steel, and then I moved into SCCO. And as you see, the stock has remained strong and done very well, including, just like Rolls-Royce, hitting new highs today, 155.78. So you are up, over 50% from this time in this video here with your dividends. And of course, again, initial video here in like the mid to low 40s. And obviously stock up roughly 300% from that initial video. But SECO, in my opinion, again, I still like it. And you're buying near highs, but again, you can see the moves, that gold, silver, copper. You can see what's transpiring here. Spoke about Caterpillar, said in my opinion should remain alright. Did well under Trump the first time. And you can see again, we were kind of near the top here before we started selling off January 21st. Closed 398.36, had the big drop off, and now the stock's up here above $600 a share. So that stock is up over 50% roughly over the last 12 months with your dividends to boot. We're moving. Caterpillar. I said financials, in my opinion, I would stick to the big boys. I said I like Goldman Sachs. If I was to buy a financial, it'd be Goldman Sachs. January 21st, at the close of the video, 634.74. Stock new highs today. Again, another stock, 961.69. So another situation where you're getting paid a dividend the last 12 months, and the stock appreciating as well, up roughly 50%, we'll call it, for GS Goldman Sachs. I also said JP Morgan would be the other one I would buy. January 21st, at the close of the video, 260, we'll call it. And you can see up, down, and now we're back up. New highs today, 337.25. So again, not the biggest return, not bigger than Goldman Sachs, but up, 260 to 70 points. Again, up roughly, 35, 40%, we'll call it, with dripping. I then mentioned, what does that say? Globalstar GSAT. This satellite company, this just randomly entered my mind, and I even said that in the video, and said, it was a little bit of a speculative play. And it's interesting because, again, the timing was terrible. January 21st, right here. You can see we chunked down. The stock actually went through a reverse stock split, 1 for 15. Right? So if you happen to listen and jump in when I made the video, you took a big hit. And then you can see the stock has been stepping and has been on the up and up since then, hitting almost $75 a share. So sometimes, again, just like we saw with something like Fubo, right? They have to go through the reverse stock split to readjust their share price. Then they have to restructure the costs and streamline the company and make it overall more efficient. And then that's when that whole restructuring story comes to fruition and the stock climbs back and the losses are more in check, right? We saw it with something like Fubo. And they didn't go through a reverse split, but something similar, right? Like a Nokia, like we saw recently. Which again, I still like Nokia, which recently did well. I'll look at it quick, even though I technically didn't mention it in the Trump video, but why not? We're looking at everything now, right? And again, you can see we're in this long-term triangle, had the premature breakdown, came right back into the apex, and then boom, we have earnings coming out. We have news of a new OS coming out of Nokia, and you can see the stock popped, technically broke out of the channel, $8.19 a share. We were talking about it again, $3, $4, $5 inside of this triangle. And we popped up. We're still technically above the channel, above the pattern. And I know you missed it. It's here at 6.5. Could drop back down to like 5 and change. But in my opinion, I do still like it for the long term. And again, they were doing that whole kind of restructuring of the business, and they were looking to be the front runners by what, like 2029, 2030, something like that, right? So, in my opinion, I still like it. Again, this is a Finnish telecom company, and I like the price. You get paid a dividend. $6, $7 a share, right? It's not very expensive. I know some people like cheaper stocks, so something to keep an eye on. But yeah, Nokia, again, wasn't specifically mentioned in the Trump video, but just another one of the names that I looked at in the past here, and I spoke highly about and said, I like it. It should be up more. You know, if I had, some wealth, I would take a position. I would put a chunk here, and you can see why. Again, you can see there's a method to my madness. And Nokia just entered my mind there. But yeah, GSAT, again, a little bit more of a spec play, but went through the reverse split, and technically has been doing very well and has been on the up and up since then. But yeah, again, that was just kind of a random symbol that entered my mind. I spoke about the backup tech players like AMD. Again, AMD, we were, of course, technically early. And you can see right here, January 21st, yeah, stock closed 122. And then, of course, we had the drop back down to like 75. And then we absolutely exploded and ran up to $267 a share. So, early, yes, correct, absolutely. And, of course, even from 120, you can see, that stock ran up over 100% as expected. The crumbs are falling off the table. They have to be picked up by some of the sideline tech players, which is why I still say, unfortunately, I know we're going to look at something like SMCI, which basically is flat from the time I made this Trump video, but I do still believe in our backup tech players. Again, AMD, very good year, climbing up nicely, and of course, even something like IBM. IBM, I continued to mention in passing. You can see right here, January 21st. We were right here at about 225, 227 a share. And you can see the stock continued to climb up, got up to about 325 a share. So again, I initially liked it, all the way back here, saying it was a $200 stock. And of course, I said I still liked it the whole time, and you can see it just continued to step up, broke out of the channel, just continues to step up, stay bullish, and, 300 plus. So a lot of those names did very, very well, as expected. SMCI at the close was about 32.5 that day. That's not the one I wanted. Why is it taking so long to load up? Let's go. Gotta get a new computer. So, technically, January 21st is right here. And you can see, little up, little down, boom, we started to climb, had that big breakout going into earnings. I don't remember whatever happened here. Obviously, we did a video here, it looks like, but you can see we climbed back up to the 60s, and technically we were holding pretty decent value, right? I mean, literally, look, if you just go back just over the last month or two since the stock posted earnings, you technically were up about 60% from the time I did the video. But unfortunately now they brought it back down. They're beating the stock up. They came in light here, missing not too much on the EPS, even though they missed by roughly 800 million on the revenue. But I still say, in my opinion, the overall situation is undervalued and there's value there. A lot of people didn't believe me with Intel either, which we're getting to, right? A lot of people didn't believe me when I made this video and spoke about Intel at whatever, $21 a share, right? Stock went to 45. So that's why I still say, is it the perfect price and timing? I have no idea. Is there value there? I am 99.9% convinced. I would personally, in my opinion, be a buyer of SMCI. And of course, the ETFs as well. SMCX, which is a 2X bullish mover of SMCI itself. And of course, you have something like SMCY, which is income ETF based off of options on SMCI itself. So there are many different ways to play this. Just like AMD, right? We spoke about AMDL, the 2X bullish ETF. So there are always a couple of different... What's this? Answer support for upcoming NVIDIA. Okay. There you go. Oh, expanding rack cell manufacturing capacity for liquid-cooled AI. Again, we're not talking about the front runner. We're not talking about the best of the best. We're talking about a situation where we saw the increase in revenue, demand We know the AI sector growing, and again, we see that all of these other side companies now have to step up and they have to take some of the business, some of the crumbs falling off from the pie to keep the whole sector moving. And it was inevitable. And you can see again, we're going back here, we're talking, 5 billion. Actually, they've been kind of just holding 5 billion. But now, again, 10 billion. And for the year of 26, again, they were initially looking for about 30 billion. Then they said at least 33 billion. Now I think they said like at least 35 billion. And you can see if we're looking for 9, 10, 11 billion a quarter moving forward, yeah, you're talking 35, 40 billion dollars for the year. Market cap, sub 18 billion. Which again is why I say, in my opinion, there's value here. Talked about SMCI. Brought up Intel. On that day, Intel closed at 2177. Maybe use first build. Okay, good for them. Right here, January 21st. 2177 on the close, 22 after hours. I said, in my opinion, there is value here, right? This is old school, brand name, blue chip, grandfathered American technology. You don't let it fall by the wayside. You find something for them to do. You restructure it yourself. You take a position and do it yourself if you have to. That's exactly what the U.S. government technically did. Again, they basically executed those credits to take the stake in Intel, and I believe it was like roughly a 9.8% stake in Intel, and of course, after that, we were off to the races, and you can see the stock hit a high of $44 a share, exactly a 100% move from my video, and probably going back to 50 plus, in my opinion. I do still like it, but again, I was telling you about it down here, over here, and down here, and down here, and over here. So if you buy it now and it goes down, I don't know what to tell you. I did my job. Like I said, people wait for the play to work out, then want to know if it's still in action. I don't know what to tell you. I did my job. I did my job. I did it very well. If you missed it, I don't know what to tell you. Spoke about Google. Again, at the time, at the beginning of the year, we were seeing Zuckerberg like sucking up to Trump and whatnot, in my opinion, just because he didn't want to go to jail. But I did say, in my eyes, that Google and Amazon are the most fairly or undervalued names in the big tech sector, in my opinion. And I said those would be the ones that I would kind of go for. And you could see January 21st here, Google at the close, $198 a share. Stock, of course, recently almost runs up to $329 a share. So you're closing in on roughly a 100% gain. And Google, in my opinion, should kind of continue going unless they really start to drop the regulatory hammer on them. And again, unfortunately, I just don't know exactly how and which way Trump is going to go about rectifying some of these situations. So, unfortunately, I can only work with what I have. But technically, in the numbers, Google's looking good. Hopefully, they don't run into any red tape issues or anything like that. Amazon here on the 21st, of course, we dipped. It was about $2.30 a share. We go up, we go down. This, again, shout out to your boy. We had calls here on this earnings report. Did very well. Stock ran up to $2.58, and now it's hanging back out here at $2.30. So, essentially flat from the time we did our Trump video. But I stand by my analysis, and I still say Google and Amazon are the names you want in the big tech splays, the Spectacular 17 or whatever the hell they're up to now. I don't know. Meta, yeah, Meta's technically up a little bit from that day, but you can see again, not much. That's very exciting. I do still like Google. I think it's the best performer. And again, Amazon, we had to drop and we came back to where we were and nothing happened, but I do still say there's value there. Okay, speak about Google, Amazon. I mentioned this Vital that was trending, and it was, I know I was talking about like domestic food sources and whatnot, but the sector was on a tear like right before I did the video, so it was just very bad timing between the recent run-ups and of course the market sell-off right after. So spoke about this, just threw this name out there, in the agricultural sector. Stock was 44 at the time. You can see got decimated, runs up to about 53, and now pulls back to sub 30. We can come back and potentially reevaluate this whole situation, but you can see we chunked up here about the first quarter, mid 24, and we've kind of been sideways since. Which usually means we may continue and take that next step up, right? But, well, we can come back and reevaluate that situation. But that was technically a name I mentioned, so I figured I'd just pull it up. Sprouts Farmers, same thing. Again, we were speaking about it as the sector was raging and the stock already went on a tear. And you can see we were here at about 140 and change. The stock continued to run up to about 180 and then really started to drop down big, recently down into the 70s. Stock sitting here at 80. Actually, in my opinion, I think it's in play here now. Again, was bad call, bad timing to jump into this one, because again, going into that video, you can see how solid it was. I do still think over the long term, it continues to perform very well, because even over the quarters, no, we did the video here, so even over the quarters, you can see, right, right after we did the video, they technically beat again, top and bottom, technically beat again, top and bottom, and then, of course, we have a slight revenue miss, and we chunked the stock down. But it really should have held its value, or at least kind of held around here. And you can see how they continued to sell it off and then chunked it down last earnings. So, I know the farmers and a lot of these, like farmers markets and stuff, everyone's kind of dealing with a lot of bullshit right now. But I personally believe in my president. I believe in my country. I do think he's going to turn the sector around, take care of the farmers. And I do think something like SFM is now in play even more. And I think back to, 100 plus really shouldn't be an issue. But we'll see what happens. Speak about SFM. Yep, numbers are still growing. I said, in my opinion, I would stay away from companies that are exposed to tariffs. I mentioned something specifically like Whirlpool. And you can see this one worked out very well. Whirlpool, January 21st, date of the video, closed about $132 a share. And you can see never even retested around that level. And the stock continued to step down, dropping all the way down to 65, now sitting at 76. But again, that stock, 132. So that's a name that came down like everything else did after we looked at it, but never rebounded. Never rebounded the way all of our other names did. And I had a feeling that something like that was going to happen. I mentioned Mondelez. I said I'd stay away from something like Mondelez as well. And where is it? January 21st. Closed 57.60. And you can see immediately it made no sense, and they pumped it up to 70, so I was wrong. Yet now you can see we fast forward, and all of a sudden we're correct. We have a potential, actually it looks like potential descending triangle setting up. I think this one may actually drop down again. Earnings around the first few days of February as well. So that could be another one we could trade over the next week or two. Excuse me. Insurance premium. Couple of weeks, whatever. Yeah, insurance. I said I would stay away from insurance really for the most part, just because I didn't trust Trump and everything they might do. MetLife, January 21st. You can see about 88, 87, and now we're here at 81. So it dropped, never really rebounded. But again, I was just saying overall the sector, I would just kind of stay away from it. Because again, the sectors that have been benefiting the most, I just feel like I really just have a feeling like something's coming. And again, I know it's a gut feeling, but interpret it however you want. Visa, I said in my opinion again that we may potentially see some sort of fixation or some sort of just change or rectification on these growing interest rates. And I know we did kind of hear about it a couple of months ago, if I remember correctly. People were talking about how, like, these APRs are just way too high, and the interest that you have on credit cards is just ridiculously high, and they were going to try to bring it down and, just try to help out the average American person, the average American family, and try to get them out of debt and, just out of this kind of enslavement of interest and debt. So I do still stand by that analysis. I may have been early, but I think I am right here. January 21st. Again, technically you can see stock was at about $3.20 a share. Up, down, up, down, up. And, you technically it's up, say about 10% in change with dividends over the last 12 months. But I don't know. In my opinion, I still think it's on thin ice. Still think it's on thin ice. I mentioned AXP as well. You can see they're technically up. January 21st, about the same price, about $3.20 and change. You can see stock now $3.80, so that's up about 20% over the last 12 months. However, it does kind of look like it's wedging here, right, and tightening. So this was another one I was going to speak about, if you guys remind me, like on stream over the next couple of weeks. This is another one I was keeping an eye on. I drew these lines out, and again, we could potentially continue to run up if they want to keep markets up, but I do have a feeling we eventually break this wedge, and I would consider puts here on something like AXP. Again, looks like earnings coming out potentially the very end of this month. So that could be an option play over the next couple of weeks, but technically AXP is up since my video, even though I said I wouldn't really touch it. Spoke about MBOT. The recent run-up right before the video, which of course, again, was here. We had the run-up going into the new year, and I did the video right here, January 21st. Stock closed $1.82. Said it's still in play. You are technically still up 10% if you jumped into that position and are still holding. And of course, we had our run up to 467, got the FDA 510K clearance. We're trying to move the Liberty system now into commercialization. I think it was, what was it, like a hospital in Georgia. I think that's going to start using the system. So hopefully we get good news updates, good catalysts, and hopefully some potential orders coming into something like MBOT. I do still like it. Again, speculative, of course. All of these names are, for the most part. We know that. We know the risks involved. But in my opinion, if all goes according to plan, which it already did, again, initially brought you on the channel at $1 a share, stock almost hit $5. Not much even happened yet. But I do still think, in my opinion, we're talking $20+ a share long term. Hopefully everything works out correctly. I mentioned SoundHound, that I still like it in theory. Should be, a good leader in the space, potentially voice AI company. Still keeping an eye on the short float. Again, looks like it can have these breakouts at any moment. But unfortunately, again, it just was bad timing when we did our video. Right here on a big spike up. Stock was up 21% that day. I mean, it was at $17 when I was making the video after hours. So, of course, and again, I knew, I kept saying this whole time as we were running up here, I kept talking about a pullback down here. I kept talking about a pullback down here to these lines of about 7, of about 6, and then boom, that's where it happened throughout March and April when markets sold off. So again, that timing, it was technically very, very bad timing as markets sold off right after we did the video. However, you can see Sound is an absolute beast and actually raged back to $22 a share before recently selling off. Now it's sitting here right around the 20-day moving average at about $11 a share. But technically, SoundHound overvalued, got some AI pump. But they seem to be doing all the right things, in my opinion. branching out into drive-thrus. And then, of course, the Amelia acquisition going into the healthcare sector. So they're going to slowly start branching out, in my opinion. I do still think new deals, new orders, new collabs come in. And I do still think something like SoundHound is in play. But again, if markets do begin to chunk down, sell off, if they continue to beat it up, you can absolutely see these levels here in the single digits again. 8 1/3, down here even 560. Even this, believe it or not, may seem extreme, but this level is extremely possible. However, I will say, in my opinion, if I would personally see this level, I would consider striking while the iron's hot. So if that sell-off does happen to come true, we'll cross that bridge when we get to it. But, yeah, SoundHound did very well. Again, originally, we were looking at this stock like the whole time down here. Did a video at like 4, almost 5, did updates down into 2, sub 2, and I know people were like, how's it trading sub 2, blah, blah, blah. I said, in my opinion, shut up. I'd just be buying, and then, of course, the rest is history. So, Sound technically already a winner for us, but from the date of the video, it's an L. If you want to split hairs. I mentioned SentinelOne, which I continue to speak about, and obviously it has done terribly. And you can see the stock was here at 22, 23, had the nice run up there to the 20s, and has just been bouncing around, tried to get back to above that $20 level roughly, and I expected this, and we didn't do that, and we've been selling off. But the growth is still there, and again, they can beat it up, but the revenue is still technically growing, and they're still beating estimates. Again, revenue chunked up to $256.1 million, and they came out and posted almost $259 million, EPS remaining strong. So, I know a lot of people may be looking at the losses that they were running with over the last year or two, and I appreciate the fact that the share count may be slightly increasing, so I know they're kind of beating it up. But again, even from when we first looked at it, we spoke about potentially getting it in the high teens, and you can see we had a run up to about $30 a share, and now they've brought it down to about half of that height. But in my opinion, I do still see the growth there. You can see the margins getting tighter and tighter as they make slightly more. And in my opinion, it looks like once we get above like that 320-ish million, 320 million mark for the quarter, that's going to flip the company to net income positivity, and then everyone and their brother's going to want a piece of it. So that's why I think, in my opinion, something like this, where it's flying underneath the radar, hasn't had its breakout yet, hasn't really made anyone big money yet, a couple of trades here and there in the past, but for the long term, this is why I look for situations like this. I do still like something like SentinelOne, again, cybersecurity company, which we should need more of moving forward. Yeah, I'm going to try to wrap this up. I'm already talking for way too long. How long I've been talking? Does it tell me? Almost an hour. What? That's how long the initial Trump video was. All right. Spoke about POW, which of course sold off some assets. Went on a heck of a ride since our video. But January 21st, POW closed $1.68, and you can see up, down, up to above 2. Big down here lately after they, again, sold off assets. And you can see revenue, 30 million. Now we dropped down to about 11 million in change, but technically they beat 2 quarters ago. Posted a EPS positive when they were expecting a loss of 3 cents. And you could see here as well, posted 1 cent a share. They were expecting a loss of 4 cents. Revenue about 12 million on estimates of 11.6. So unfortunately, this one just not working out the way I anticipated. However, let's check the numbers real quick, I guess, while we're here. Yeah, 60 million in cash. We're bringing in what, roughly 50, we'll call it, yeah, even 50, 60 million, we'll say overall for the year. 60 million with cash, with assets. Technically, in my opinion, the stock is undervalued. But, you know, hasn't really shocked anyone since we first looked at it. So, you know, if you move on from this one, understandable. But again, as I say, you know, I'm always honest. So I mentioned it in the video, so I'm not hiding from anyone. We look at it here, but been on the up and up lately, but sold off some assets. So now the revenue took a hit. So it may just kind of hang out and not do much for a while. I re-mentioned Swibby at the time was about 10.5. Yep, right there. And you can see we climbed up to above 11, had these big bounces around, broke support, came down to the 7s. And then, of course, the last couple of quarters been on the up and up. Stock recently hits 11.50, hits a new high. And, of course, is still sitting back here at around the $10 range. So, technically, not much has happened if you bought this day. However, a lot of people, as we were breaking down here into the 8s and the 7s, asked about it and were able to jump in some shares and some calls down here and made a couple of bucks over the last quarter or two. So shout out to those people. But Swibby, in my opinion, I do still like it. Still like Swibby. I mentioned something like Waste Management should kind of hold its own. Waste Management, January 21st, 212, 213. Ran up to 242. And it's basically flat. But technically, the revenue has been climbing nicely, right? From 6, 6.4, almost 6.5, holding 6.4. I do still like WM, Waste Management, again, garbage company. Pays you a dividend. I mentioned 3M. Again, brand name company, making products, American company. January 21st. Stock had just popped up to about 146, 147. Stock recently hit highs of almost 175, currently sitting at 163.5. And again, you can go back. I did a video on 3M. Yeah, it was somewhere in here. I know it was somewhere down here. I want to say like in the 80s or the 70s. But you know, again, it's a boring name. You know, people forget about these companies. They're not interested. People only look at the tech sector. They only want, you know, certain big swings, or they, you know, just put their focus in other places. Meanwhile, there are still phenomenal companies out there that you could keep an eye on and buy at good prices. And you can see from these lows here on something like 3M, we go sub 80, and now we're, you know, back up almost 175. So quite a big rebound for 3M. I do still like it. 3M, and I mentioned, yep, Corning was the next one. Absolute phenomenal winner, Corning. GLW, again, people don't know about this company. They don't care. They don't talk about it. And that's exactly why I like it. From January 21st, we closed 51.5. You can see up, dip, and then we run up to almost $97 a share, netting you almost a 100% return. Pays a dividend. Stock still sitting here at almost $89 a share. And I said I would stay away from something like Dow Inc., Dow Chemical, with RFK in there, making us healthy. The chemtrails, something like Dow Inc. is something I would not invest into. Stock here, 41.5 on the day of the close, and you can see now sub $25 a share, hitting a low of 2040, new 52-week lows from the time I made the video. So again, 100% right. No one's going to be 100% right, and we know that day by day, week by week, month by month, our intel, our information coming in, we had to adapt. We had to call audibles, right? Which again is why it's rough to jump on and make a video every time some little thing changes, which is why in Discord and live on stream, it is much, much easier for me to communicate to you guys instantaneously and see if we have any changes to our analysis, right? We change every day, every minute. Just like whatever oil was setting up to do a couple of days ago, right? Now it's a completely different story because of the catalyst and the news and the geopolitical event. So that's why, again, you have to pay attention. You have to stay sharp. I try to stay on top of everything, but again, with all due respect, I don't work for any of you individually, and I know some of you want your own private videos. You want me to message you when something happens, and again, not to be a schmuck, but you're probably not paying me enough to do that. But I wanted to come back to the Trump video because I knew that a bulk of what I said did come to fruition. And of course, something that I always mentioned in passing, which we've seen recently, is the breakout in silver. And I said this whole time back here, 23, 24, when I was making videos before the community started growing, really, I was saying the whole time, in my opinion, I would consider a position in silver that would help not only diversify you, but of course, protect you as a hedge position, just in case anything happens with the dollar or the markets or anything like that. And now we're hearing about the massive potential paper short silver position that the big institutions have and how they're scrambling to cover their short positions, and silver absolutely exploding, and we need it for technology, and Venezuela has more silver than Africa. We just went into Venezuela, now we have all this oil, we have all this silver, while silver's breaking out. And people are talking about the big silver shortage and the big silver squeeze. And according to my trend line here, if this continues, which I do believe it will, I think, in my opinion, the next psych level of 100 an ounce is coming. And then we could see this trend line up here of roughly $200 an ounce that could be coming inside of the next 12 months. And I do believe that. Because this whole time it should have been up more, as gold was. And now, of course, if technically our country doesn't have a silver reserve, now the pieces of the puzzle, now it all starts to come together and make a little more sense, right? But you can see how technically this was our top line resistance. Whoops. Oh, yeah, okay. Technically this was our top line resistance, and you can see we came down. And even though we tested it, you can see it closed and stayed above this level the entire time. And silver still here at 76.25 an ounce roughly. But the moving average coming up. And again, they could retest it and even try to flash crash it to force the stops out. But in my opinion, no matter what they do, we're going higher. And I truly believe that. I have very high conviction in that, just as I did back here and back here and back here. So in my opinion, I think SLV calls short and long term should work out, and I still say oil should be down. It shouldn't have been up roughly 1.8% today with this news on Venezuela and the increased supply now on hand. So in my opinion, I think USO puts, I think SLV calls. But of course, again, there are a lot of names that are still in play. I mean, I mentioned Fubo in passing. We technically got the good news on Fubo this year, right? The stock popped up to whatever, like $6 or whatever. Now Fubo, again, is going to be the Fubo Hulu business merged into one. So I know there are some people who sold on the news and made some profit. There are other people who said, no, I'm just going to hold it, and I'm, going to ride this wave now of this Hulu combined business. So to each their own. With something like Fubo, again, I know it's not everyone's cup of tea. And of course, we had, again, a lot of names that we looked at. I'm trying to wrap it up, but I'm just so good, it's hard. Because I just want to keep talking about how awesome I am. Again, something like Hamilton Insurance, video back here at about 16. Stock recently hit highs of almost 29. It's been doing very well, growing nicely. HG, Hamilton Insurance, up almost 100% from the first video. Avondale. This was the one few pharmaceutical stock I mentioned in Discord that I would consider taking a position in. I posted the chart right around here and said, in my opinion, if you can get this for like sub 7 in the 6s, that would be a great buy. I'd be all over it, and I think there's value there. And you can see the stock not only reclaimed its value and climbed back up hugely, right, yielding 200% returns, but then actually received a bid. The stock pops, and you can see there at 21.5, hitting a high of about 23.5. Calling the analysis absolutely perfect on AVDL, which unfortunately now is no longer available for you. But no one listened on that one. HII again, I still think is in play. I'm just trying to remember again a bunch of names that we mentioned that we look at. Oh look, HII new highs today, $366 a share. Did a video back here in April when Trump was talking about the Navy again in the low 2 teens, and the stock now $365 a share. So, you know, the winners are still being picked daily. But again, you know, some of this information changes, and that's why you have to try to keep in touch with me. And again, I'm sorry, you know, I try to make video, you know, I started making videos. People wanted shorter videos, so I tried to sum it up more, but then people asked questions, and then people said I should do shorts, and I made a couple of shorts, but they got just the same amount of views as the videos. And then people said, oh, you got to stream live during market hours. That's why your channel's not blowing up. So I started streaming live since like, what, July, August? The channel has completely stagnated since then. We are still at roughly 7,100 subscribers. So the entire community stagnated since going live, even though unfortunately going live has been benefiting a lot of the community. So, you know, I don't know. Unfortunately, there's no way to make everyone happy. And, you know, I'm only one man. I can only do so much. But, I mean, so many companies just doing well. Coca-Cola consolidated. I mean, look at this again. From the time of the video, even, you're still up a chunk. They pay you a dividend to own it. And a lot of people told me, again, it originally brought to you at like 500. It went up to like 1,500 or something. Then they did a 10-for-1 split, and that's what a lot of you were waiting for. Stock went down to sub 105, right? $1,000 a share, even though it just ran up to almost 1,500 a share, right? 10-for-1 split, dropped down to about 1,000 a share, about $100 a share. A couple of people jumped in, and they saw a good thing coming. And of course, you can see recently, almost up to $170 a share. I mean, you know, 60, you know, 40, 50, 70% growth with dividends. I mean, you know, work smarter, not harder. But that's pretty much every name I looked at specifically in the Trump video, with a couple of extras right there at the end. And unfortunately, this video went on 2-3 times as long as I wanted it to, but whatever, I don't know. Now I'm exhausted. We recapped that Trump stuff. I did my job. Let me know what you think. Did I do a good job? Did I do piss poor? Could we have done better? What are you expecting for 26? Whatever. But give me your feedback down in the comments section. Of course, like the video, sub to the channel if you have not yet. Share the video too. Let people know. You know, I got a decent head on my shoulders. Made some good calls. A lot of people out there don't know about us. But yeah, that's pretty much it. I'll end it there. So, Stocks by the Numbers. Thanks for stopping by. Appreciate your time. Appreciate your support. Love you guys. Hope everyone had a Happy New Year, Merry Christmas, good holiday. And I hope everyone's pumped and positive and ready to have a good 2026. Thanks for your time. I love you. Talk to you later.